I think it's very important for your viewers and for everyone to understand that it was a struggle. So it's been what, 5, 6 years now, 6 years now. But I can say that I've been really profitable for the last two. So those first 4 years were a struggle because you're learning, you learn the technical side of things rather quickly, and you get your first taste of success rather quickly. At least I did in the first 3 months. One of my successes was turning a $400 account into a $3,500 account, $3,500 account in one night. And after I did that, after I did that, yeah, as you can imagine, what it would do to a very young trader. I was getting ready to quit my job. I was planning my
Yes,
retirement,
brilliant.
planning everything. Yeah, but then you realize that trading is not as simple as that. Making the money is one thing, keeping the money is a whole different issue. So I went through phases. Me personally, I kind of think about four different phases when it comes to the trading journey. I think about the beginner trader when you're just learning the ropes and you're just learning how to chart, learning how to place trades, and just understanding the market. And then there's the first stage of intermediary trading. You're an intermediary trader where you kind of know how to mark up, you kind of have a strategy that you're working or a couple strategies that you're working, but you're not profitable yet. And as a result, you're trying to figure out which strategy is going to be your particular strategy. So you're kind of in and out of different strategies, different mentors, but you kind of see some successes some days and maybe not so much towards the end of the week or the end of the month. Then you have your advanced intermediary trader where you are starting to see profits and you have some pretty good days. You have some profitable days, maybe a couple of profitable days in a row, but you tend to not end the week profitable. Or if you do end the week profitable, the next couple of weeks are unprofitable. So technically, you're still an unprofitable trader, but you're a little better than what you were before.
Mm.
And I think at that stage, where I was at that stage, is I was in a place where I understood what I was doing, but I was not in full control of my emotions, and I was not in
Mm.
full control of how I react to trades and being more aware of how I am when it comes to money and when it comes to trading in general. And I think the issue that some traders fall into with that phase is that they try to change themselves as if like you being a greedy person are going to not be a greedy person all of a sudden. And that's not necessarily the case, right? You're not going to change yourself that easily, but you can be aware of yourself, can be aware of your weaknesses, you can be aware of your temptations and put things in place so that you can safeguard yourself to become a better trader. And that's where you get to your more advanced trader, which is stage 4 for me.
Right, folks, welcome to Trading Up. We've got Jordan Dejoie in the house. Now, this guy's been featured on some high-profile funded trader podcasts. We've got him on the show here today to share his story, and we also get a chance to look into his price chart and, in fact, learn pretty much his entire strategy in the next video that drops here on Trading Nut. Now, this guy is about to reveal his fourth stage of becoming consistently profitable. We're going to dive into that, but before we do, let's hear from my sponsor. Hey, start trading Forex, indices, and commodities with up to 800K of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target, and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now, for futures traders, Blue Guardian Futures offers up to 450K in funding with 100% profit on your first 15K. With low targets, no activation fees, and unlimited resets, it's one of the best deals in the industry. Visit BlueGuardian.com or BlueGuardianFutures.com to start trading today and grab their limited time discount code.
And that's where you get to your more advanced trader, which is stage 4 for me, where now I'm in full awareness of what I'm doing, full awareness of my emotions, who I am. I've put certain things in my trading plan to make sure that they're serving me, right? So whether I tend to overtrade after certain wins, that I tell myself after 2 wins, I close the charts no matter what I see. Or if I really get emotional after a loss, maybe I have to step away after a certain amount of percentage loss. But either way, I'm in full understanding of those things. And most importantly, I have the experience. And I think that right there is very important because I think when we just come on these platforms and we just tell people you can come and be a profitable trader in 6 months, or just join my program, I'll make you profitable in under a year. It's a little dishonest because it takes time to really understand and gain that experience in the markets. There are certain trades that don't necessarily have a lot to do with my personal setups or my personal trading plan, although they should fall in line to some degree. A lot of trades are just like, I've seen this before. Like, I've seen this before. I've been in this environment before. And I kind of get a good understanding of what the market is likely to do. Or on the opposite side of things, it fits my scenarios, it fits my trading plan, fits everything. Something doesn't feel right because of my experience again. Right. So those things, you can't teach those things.
No.
And it's very important that traders just take their time and allow that to build up in themselves and then get to that place where they're consistently profitable.
I think it's a very good point you make there in terms of, like, it's almost the difference between a technical analyst and a trader.
Yeah.
And it's easy to get the technical analyst part. It's hard to get the trader part, and it's hard to even define the trader part and then teach the trader part, because it's such a mindset thing and also such a experience related thing. I mean, had you had that 400 to 3.5K account flip, had that been over 3 months, I would have thought a bit differently than one day or one night. It's a completely different ballgame, right? Because 3 months, it means you've probably gone into a bit of drawdown. You've had losing days, winning days, and at that point, you can pretty much do anything. Now, diving back into your trading career today, so you were funded. You went through the prop firm phase. I think you're just kind of like in the transition phase at the moment. But do you want to talk us through that funding journey and how all that went?
Yeah, sure. So, I would say after towards my second year of trading, I fell upon funding programs, was introduced to FTMO first, and then eventually TFT, which was my program of choice. So eventually, after some time, it took some time, maybe after a year, I finally became funded. And maybe it took some time after that to actually get to a payout. So losing many, many accounts, losing a lot of money throughout that process, but eventually getting to payouts. And I got to a good amount of consistent payouts with TFT while, things were pretty good. Eventually, again, that's the thing with trading, is that you start to plan and overplan the future. And my plan was to gather as many funded accounts as possible and eventually get to 6 and 7 figures in my earnings. But there was a lot that happened in the funding space on the Forex side, so it kind of left a bitter taste in my mouth. I lost a couple accounts. I never got them back. And for me, I think after that, I made a decision to start trading my own personal funds. Right. I did feel comfortable at that time. I did feel like I was ready. And I did feel like, it's just overall better, because ultimately with funding programs, I think they serve a good purpose, but we have to be real, right? There has to be a winner, there has to be a loser. It's not a mutually beneficial relationship at all. If traders do not lose, these funding programs won't be able to exist, right? But at the same time, too, you as a trader, depending on where you are, ask yourself, is it worth the risk? And do I feel like I'm good enough right now in my current trading? Am I consistent enough where I can go in there, get to a decent sized payout, and then I can continue to trade my personal funds? Because that might be worth it. Because if you're trading a $400 account, going into a prop firm and grabbing $5,000, maybe even $10,000, it does wonders for your personal account. And that would be my next advice. Instead of spending that money, put it in your personal account where there's not as many rules that are not necessarily designed to trip you up, or you're more able to trade a lot more comfortable, and you're able to build that personal account. But yeah, since then I had been building my personal account. I had a pretty good accomplishment where last year, from about March to August, I had a 5-month streak where every single week I ended off the week profitable. Profitable weeks, not a single unprofitable week. Finally had hit up unprofitable week on in September, but ultimately it's been good building that account, and I think the funded programs were a part of that. They gave me the capital to get started, and I was able to build off of that.
Okay. And can you sort of give an overview of like how you trade? I mean, do you have a specific style that's publicly known, i.e., like an ICT style or a Malaysian SNR or something like that? Or is it more your own take on what works for you?
Yeah, it's more of my own take, but it's very, very simple. I started off being more of a pattern-based trader, where I was seeing, retracements, flags, etc., using Fibonacci, all the like. Eventually, as I matured in my trading, I went back to the basics because I realized that's what works the best for me. And that's just support and resistance, as simple as that. Now, I do use things like, trend lines and, retests or patterns, or you could say double tops and all of those different types of teacup patterns. I use them as confluences, but they definitely are not the base of my trading style at all. My trading style starts with support and resistance, and basically what I want to do is to box in price in a way where I'm waiting for that momentum to break out. And because I'm waiting for momentum to break out, now I'm not always dependent on the trend necessarily, right? It'd be nice to follow the trend all the time. It's an extra confluence. But sometimes what I realized, or the data that I've gathered is that support and resistance breakouts, to me, have a higher success rate than a lot of the trends and a lot of the different types of other strategies and all the other patterns that are supposed to work out that tend to not work out sometimes. So I relied more on support and resistance. That's how I trade right now. I trade in times of volume. So New York session is my preferred session, especially when I'm trading gold. And that's been very, very successful for me.
And so how did you, if you go back to like when you sort of had that tipping point where you transition from a break even to profitable and you had, you felt like you were now a consistently profitable trader. I mean, what were some of the things that you changed just beforehand, and what could other people sort of learn from that?
Yeah, it's a great question. For me, I went through many phases of aha moments. And I think a lot of traders can relate to that. I think there are moments where you feel like you finally got it, and maybe you've won a couple trades because you had a new strategy, and you finally feel like this is it, this is the one. And then all of a sudden, things don't work out as you thought they would. And, you're back to the phase that you were currently in. And I think, ultimately what I've gathered throughout that process is sometimes I just wasn't patient enough with a strategy. Many strategies work. I would even say most strategies work, but you do need a large enough sample size in order to test that, right? A strategy may be 60%, may have a 60% hit rate, but those four losses out of 10 may come in a row, and
Yeah.
you may start to think that this strategy doesn't work, and it's not the case. You just need a larger sample size. So as far as the tipping moment for me, it started to change when I was a little bit more aware of allowing myself to get a bigger sample size of my strategy, along with documenting and reviewing those trades, which is so important. Sometimes we go in there and we just trade, and win or loss, we walk away. But reviewing the trades, reviewing what went wrong, also reviewing what went right. And within that review, being honest. Did I accidentally win this trade? Or and also on the losing side, did I do everything that is in my trading plan and then it was a loss, or did I break my trading plan somewhere? Because then you have to consider that that's not a legitimate loss in terms of following your trading plan. So understanding how to do those things, separating those things, and really getting a good sample size was when I started to see my trading take a turn for the better, and eventually see myself a little bit more profitable.
How much back testing and chart time did you do to I suppose come up with your strategy and then hone it down so you were confident enough to place live trades or even demo trades with it, or just use it in general?
Yeah, I think I started off back testing early on whenever I would test any strategies. Back testing for me has its benefits, but at the same time, I don't think, for example, I can backtest a moving average crossover, and I can see that every time it crossed over, price went down 10 pips. I can get 10 pips every single time this crosses over. But what I don't see, what the missing element is the live market. And sometimes you're looking at a EMA or MA crossover, and in the live market, what it doesn't
Mm.
show you in your back testing is that sometimes it crosses and then uncrosses, right? And
Yeah.
and sometimes you're getting into that trade a little late because the indicator is delayed. So a lot of times back testing is good for capturing data, but I wouldn't put it as a direct measurement to how you will perform, because how you will perform really is grown through practice of live market conditions, because there's so many things that happen in live market conditions that as much as we can rewind as much as we want, but we can't necessarily repeat that, and you certainly can't repeat your emotions when you're back testing. So those things matter too. So forward testing is my preferred method of use. I would just prefer to go into the live market with a very small account, something that's not, going to hurt your pockets, and just practice that way instead of back test spending so much time back testing.
And what kind of emotional things did you struggle with back in the day, and how did you overcome them?
Yeah, I think a couple of things are just, I had this habit where I would take a big loss, and obviously it's because I over risk, and I would lose so much of my account that I get to a place where I'm just like, forget about it. I'm just gonna place an even bigger trade, and if it blows, it blows. you know. So I think something like that was that was a big challenge for me, because the market, it doesn't care. It doesn't really care at all about what the money is for, or how hard you work for that money, and you need to make sure that you put things in place to control that. I also was an over trader. And I think implementing no more than two trades a day definitely has helped me. Um, Also, I think sometimes little by little, the market could give you a little bit of doubt. I do consider myself a confident person, but definitely when I was a struggling trader, I did have those moments where I was like, well, is everybody making this up? Like, is it really possible
Yeah.
to be profitable, right? In these markets, and am I just an idiot here? Is everybody just playing a game on me? Or am I as good as I think I am? And sometimes that happens too, because you have a strategy that's working so great, and market conditions change, and all of a sudden you're not profitable for months, and you start doubting yourself, and you start questioning yourself. And I think all of those things, all of those range of emotions hit me at some point in time in my journey.
And so, the challenge really is, or what I find it myself anyway, the challenge is like trying to, I suppose, get to a point where those emotions don't creep back in, because it's just
Yeah.
an emotion, right? It's going to creep back in. It's there because it's ingrained in yourself and in every human. How do you? And I say this for myself, right? So like I'll
Yeah.
say, right, 2 trades a day. Only going to do 2 trades a day. That's it. Then I'm walking away, and then after like 2 weeks, I'm bored of 2 trades a day, and I'm thinking, well, I'm doing my 2 trades a day. It's going well. I'm going to
Yeah.
take I'm going to take a third trade. I should be able to take a third trade. There shouldn't be anything wrong with taking a third. I'll take the third. And then all of a sudden you feel a hurt when you're taking on your fifth trade and you've lost control again. How do you keep
Yeah.
all those emotions in check even now?
Yeah, yeah. It's even now. Like, look, even now, it's hard. I'd be lying to you if I didn't tell you that I don't still deal with some emotions. But I think now, I think understanding who I am, putting certain things in place has been the number one thing for me. That even starts outside of the realm of trading. And what I mean by that is outside of even my trading plan, my lifestyle, right? My schedule. I wake up at the same time every day. I'm going to the gym in the morning every day, right? I have a pretty consistent and predictable schedule, so that also when it comes to trading, when I'm trying to actually implement that kind of consistency and somewhat rigidity, it's not foreign to me, right? It's not something that feels like I'm forcing myself to do this thing, because my lifestyle is just like that, and it complements what I'm trying to do on the charts as well. I think in general, like it's hard to. You'll never get to a place where you completely master every single emotion. I think it's going to happen where you kind of lose your cool just a little bit. But understanding that even making the progress on how you lose your cool matters. Even those things matter. Last time I lost my cool, I blew my whole account. This time I lost my cool, I blew 20%. We did a little better. Next time, let's try to get even better than that. It's just a constant progression, a constant work on yourself, and that will eventually show itself on the charts as well.
It's just kind of, it's levels basically. You're kind of getting to that level where the damage isn't as bad as the level before. And yeah, it's and then, you know, being able to laugh about it afterwards and go, you know, that was a silly mistake. I accept it and just move on, as I did yesterday. Now, what about, like, if somebody's starting out in their journey, as will be a lot of people listening to this, what would you recommend? Like, if you said, like, here's what I've learned, here are the step-by-step things you must know, must do, what would they be?
Okay. I would say number one, if you're starting out your journey, do your research as much as possible on, first of all, the different types of markets, right? It's not just Forex. We talk about trading. There are many, many different types of markets out there. And try to get a sense of what each market is about, what are the players in each market, and then try to get a sense of where you want to dabble a bit. Next thing is, I would start with YouTube, right? I would not start with anything paid. I would start with free things just to gauge your engagement with the content. Are you really, like, ready to start this journey? Are you really engaged? Are you really ready to start taking notes and take in the knowledge and take this seriously? Because don't spend money if you're not. And when you are ready to spend money, the only reason why I would say to invest in courses, because I invested in courses, and I think the thing is, YouTube has all of the information that you'd probably find in a course, but it's just scattered. It's just scattered everywhere. So it's not to say that you need a course, but I would always recommend, as a beginner trader, to have something a bit more structured and designed for you, right? And put yourself in a course where the person who is the trader who is providing that course, you understand how they're explaining things. You understand how they're explaining the market. You like their teaching style. Don't base it off of their Lamborghinis and the things that you see on IG and all of these things that are attractive to the eyes. Those things are great, but believe it or not, that's not a measure of how well this person can teach you how to trade. There may be some great traders out there, but it doesn't necessarily mean that they're great teachers. And you need to find a great teacher who really can break down the charts in a way that you understand and in a way that you can digest very easily. From then, I want to, like, you know, it's controversial in terms of joining people's learn and earns and signals. Me personally, I don't necessarily think you're going to grow from a signals chat, but you can. I don't necessarily think you're going to be profitable, rather, from just a signals chat. But there are areas where you can grow. I think there are areas where you start putting your chart work out there. Allow other people to criticize it. Allow yourself to take your own trading ideas. If you're not confident about a setup, fine, follow the instructor's setup. But eventually, I think for everyone who is joining signals groups or learn and earns, whatever, eventually you want to branch out on your own. So you are making these decisions, and they are your own decisions, and you're learning from those, whether win or lose. That's the only way, to me, that you become profitable. You have to eventually, at some point, yes, take the course, do the learn and earn, do the signals, get experience of everything. But eventually, you have to become that independent trader, making decisions on your own, trusting your own analysis, and going through the ebbs and flows of the whole journey of trading. And also understanding that the journey could be long. It's not necessarily 6 months to a year. And if somebody has done that in 6 months to a year, they're definitely the anomaly. But most of you will take years to become profitable. And I think understanding that from the start, and understanding that this is a marathon and I need to just stick to the course, is usually going to serve you better than somebody who comes in and thinks they're going to get rich quick.
Yeah, and I think, like, I mean, and a lot of people's ego will be in the inside of their mind now, going, no, I'm different. I'll be 6 months to a year. If they're in that early phase, the reality is, guys, You won't be. It'll be much longer than that. So just bear that in mind. Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Now, what about like your daily routine? I mean, do you have a routine? Do you stick to it religiously, or are you kind of one of these guys who just like, okay, I'm ready, I'm going to jump to charts and have a look, no setups? How do you manage it as well? Do you set alerts? Do you just sit there through a session? What do you do?
Sure. So for me, my routine on the charts goes as follows. So I'd wake up, I do a prayer and I'd read my Bible, go to the gym, and then I'm going to shower and jump on the charts. Usually that'll be a live stream most of the days of the week. The days that I'm not live streaming, then I am actively looking at the charts. I'm throwing setups at my students, and I'm also just putting information for them to be aware of as well, depending on what's going on in different economic releases that we should be aware of. I'm informing them of those things and just making sure that I'm ready for whatever the market presents. I think in general, my schedule is pretty predictable when it comes to the markets, but also I don't necessarily have a set time where I'm definitely going to place a trade. It is a little open where in New York session, I can place a trade anywhere from maybe 1 hour before New York session, like 7 a.m. where I live, all the way up to about 11 p.m., even going on 12 p.m. So I'm more of an intraday trader. I tend to volume definitely comes in around 8:30. So I tend to find trades around that time. But, it's not uncommon that I'll probably have a trade setup that I see around like the 10:30 going on 11.
Now, so it's quite interesting. So you do this live stream, right? Does the live stream run through the whole trading session with the students?
It does not. It does not. We go through the beginning of New York session. And then after a while, maybe right before or right after stock market open, I stop the live stream, but I don't stop the engagement with the students.
So you'll keep trading at that point, will you?
Correct.
Right. Okay. Just instead of it being live, because I was just trying to think, does the live stream help you stay focused and, 100% focused on the chart? I mean, is it sort of a game changer in that respect?
It definitely helps. The live stream, what I love about it on a personal level, it keeps you accountable, because if you're giving out these rules and these things that you stick to, and you tell everyone this is what you follow, then this is what you should follow, because everybody's watching. Also, the other thing is I don't want to. The other reason why I don't have it last throughout the whole New York session, I don't want to implement that habit that you need to be watching the charts 24/7. Because naturally, that's not necessarily who I am. I do my live stream to benefit my students, but who I am, I'm barely watching the charts, to be honest, on a regular day. I have alerts that I set, and when price hits that alert, then I'll take a look, and if I like that setup, I'll enter. But I'm rarely looking at the charts. But again, I don't want to put that out there as if you shouldn't look at the charts. This has come after years of experience and plotting out the areas at which I feel that I'll be ready for a trade.
And so the time between an alert going off and you getting in a trade, what is it typically, and what time frame are you entering in on, analyzing?
So in general, I'll have my charts marked up. So I'll start off with the daily, and I'm looking at support and resistance, and drag that all the way down from the 4 hour to the 1 hour, and I'm taking a look at where are the pressure cookers, so to say, and where are the areas that price may break out from. So then I'd set my alert above an area of resistance and below an area of support. And depending on what alert hits, I'll take a look. If I do like the setup and it fits my parameters, then I will take the setup and I'll enter.
How long do you reckon you're waiting between an alert and entering?
Oh, that could be within seconds. That could be if the alert hits, and it's a lot of times with the with support and resistance trading. Once that breakout happens, that's pretty much what you need. That's kind of what you were waiting for. So you're just making sure it looks as you expected, and you're entering right away. So
Okay.
that'll be within the minute.
Okay. So you've got it on a minute chart. You've got an alert set, and you're basically going. It's a range. Let's call it a range, and it breaks out of that range. It pushes through your alert, prints the candle, and you're like jumping on that computer, or how are you doing? Jumping on the computer, or are you jumping on your phone? What are you doing? And
I'd usually probably jump on my phone, but I'll say this: I'm more so executing on the 30-minute. I'm
okay, 30
executing,
minutes. Okay.
yeah. So from the daily all the way to the 1 hour, I'm using that as analysis, and then I'm looking at the 30-minute for final confirmation. Because
Right.
for me, my final confirmation is seeing a candle close above or below an area of resistance or support. So once that 30-minute candle closes, that's my confirmation to get in for that quick push.
And are you looking at a one-to-one, what's your risk reward on this?
I like to get a 1 to 2, especially with gold. If the market is trending well, I like to go from anywhere from 70 to 100 pips. At around 50 pips, when I get to 50 pips, I'm making a eye test decision. Is the market still pushing a lot of volume, or should I just take my profits here? Either way, there's a lot going on around that 50 pip mark. I'm definitely securing myself. I'm not taking a loss. I'm also deciding if I'm going to take all of this and walk away, or if I'm going to let it run because I see a lot of volume and potential for the trade to go further.
Cool. Right. Well, look, this has been fantastic to have you on, Jordan, and gives us a ton of value in here for people to dive into and digest and potentially rewind and listen to bits again. What is the best way for everyone to get hold of you?
Yeah. I think IG is definitely the best way to get a hold of me. Send a message if you need anything. I do answer back, and I just love to share information as much as I can. I love to help. Many of the people who send me messages, I quickly respond. So if you do want to learn more, or maybe more about my trading style, definitely my IG handle Jordan_the Maestro. But yeah, definitely feel free to reach out.
All right, folks, what we'll do is hook a link up under this video to Jordan's IG and all the other show notes as well. And we're going to record another video where he's going to break stuff down on a chart, so don't miss that. So go and find that out on that link under the video. While you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one.